Good morning, traders, and welcome to the Bookmap crypto webinar series today with Nicholas Merton at DataDash. You may have heard of him, very prolific crypto trader. He looks at order flow in the crypto markets here, of course, on a lot of higher time frame he's looking at, and kind of higher time frame and fundamental outlooks on in the crypto environment. He is using our new liquidation indicator. He did a nice video this morning covering some of that with CVD and also just the order flow in Bookmap. If you're not familiar with Nicholas, he's a founder of DataDash, one of the largest cryptocurrency YouTube channels with over 500,000 subscribers, and then being an international speaker, a thought leader, and crypto analysis in the space. He's utilized his over 10 years of experience in traditional markets to understand the potential of these cryptocurrencies. I'll put this into the chat for you if you want to further explore Nick's website here as well as his YouTube channel. And then I do want to mention for anyone new here before we jump in, some special offers we're doing for this crypto webinar series. 30% off. This is a really nice offering for any new monthly subscriber. Okay, so that's kind of the baseline here. If you're a new subscriber, you want to try Bookmap, put in crypto series 30% off into the coupon code when you subscribe to Bookmap via bookmap.com. We're also giving away each day here a month subscription to Global Plus, and it's just during this webinar series here. So each day is a new chance to win. Tune in each day and get more chances to win for that 1 month subscription to Global Plus. And then this is the way that you're going to do it. You join through our Bookmap Discord special events room, and type in there CWS for crypto webinar series. And then I'll put this link into the chat for you as well if you're interested. Okay, so you need to join through there, and then quickly go through some disclosures here, and then we'll turn it right over to Nick. The general disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice. Presentations are for should not be considered specific investment advice nor recommendations. The risk disclosure trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so Nick, if you can share your screen there, and then I will present it and we'll get going.
Awesome, Bruce. I'll go ahead and get everything set up here real quick. Let's see here. Alrighty, can you guys see my screen here good?
Looks good. You sound good. I think we're ready to go.
Alrighty, let's go ahead and kick things off, guys. First off, thank you all so much, especially yourself, Bruce, for giving me the opportunity to be here today. I'm a really big fan of the tools that Bookmap has built. We've been one of their partners for some time on the DataDash channel, and to be completely candid, there aren't really many tools I like to utilize when I'm going about trading in markets. I've been a longtime user of TradingView. As Bruce had hinted, I've traded in financial markets for the past 10 years, completely self-taught, traded in equities beforehand, as well as commodities and Forex, and took a lot of that knowledge over into the crypto market. And as also Bruce hinted earlier, I'm a really big fan of following metrics like the CVD, the cumulative volume delta, tracking market order flow, as well as order book, bid and ask, support and resistance, and trying to understand how these elements can really start to move price. I want to go ahead and kind of kick things off through a little bit of a presentation format, and we'll kind of dive in through both TradingView and Bookmap and how I utilize these tools in conjunction with one another in order to trade within various different time frames. And that's going to be the big focus for today's presentation. I'm more of a long-term trader. I like to focus on the longer-term time frames, and Bookmap What's nice about it is that it can really come in handy on all those different time frames. But outside of that as well, it can be really great for finding those short to midterm trades as well. So we'll be talking about how I would preferably use these tools myself and going about trading crypto markets more specifically. So again, we've got three different time frames here. Now, you guys have probably heard the umbrella terms day trading, swing trading, and long-term investing. Because of the fact that we're talking more specifically about trading here, I want to go ahead and dive a little bit more into kind of the three different time frames that I work for when I'm trading. You got, for example, long term, which would be like a kind of 6 month or more when you're really trying to ride the bigger waves of crypto market cycles. You've got kind of midterm time frames, kind of 1 to 6 months. In this case, where you're, for example, making a swing trade, it's not a day trade, and you've definitely got a couple of weeks of price action where you're hoping to make a lot of those returns and eventually hit your targets. And then the kind of short-term time frames. This would be from short-term ranges like day trading, which I rarely do. It's just not my personal trading style, and onward towards weekly swing trades. And one of the big things that I'll kind of gravitate towards, and I'm maybe curious later in the conversation, maybe Bruce can chime in. Like I'm a big believer in this case about expanding your time frames when trading because the tighter your time frames can be, the more likely you are to get stopped out, the more likely you are to get kind of forced out of your positions, and to get kind of caught up in the unpredictability of short-term market movements. So that's a big thing that I want to emphasize here today. We'll dive a little bit later on into how I utilize Bookmap, two of the major strategies, and then also some just broad trading tips. I want to first dive in though into generally how I kind of approach looking at different time frames. And let's start off with the longer term time frame because for me, this is the one where I think the most profitability and also the most predictability comes in for any given investor or trader. So right now we're taking a look at the Binance pair for BTC to Tether. And what's really interesting about this chart here is that even though it doesn't give us the whole extent and range of Bitcoin's history, I think what it does is a very good job of, especially being one of the large liquid order books here, the tether markets for Bitcoin, is that we can really start to see how we can analyze long-term timeframes and find incredibly great opportunities. So whether you're someone who is more of a short-term trader or long-term trader, taking a look at the long-term view can be really useful for two reasons. One, if you're a long-term investor, you can spot really solid discount opportunities, and it's quite easy to spot. For example, I've highlighted a lot of these red candles here with green circles, or generally these points when we were going through capitulation events. If we take a look at the price decline during these windows of time that lead up to these unique volume candles here, we can see that we're getting over around 50 to 60% corrections each and every time here as we go through these periods of time, right? We can see one print back here, for example, during the May correction in just a matter of 2 weeks, we've got about 50% plus correction. And leading up here into the capitulation candle we saw just back in early May, another 45% correction. There is key similarities here in this case of setting up those situations where on a given 6 month time frame, you're picking up Bitcoin and a variety of altcoins at a really stellar discount, and they're pretty predictable to find. We're not really trying to nail the bottom here. What we do care about is making sure that we get those closes on the candles. We see that their volume, in this case, is stand out against the traditional volume profile of the market given that same time frame. And you also get a lineup of technical indicators. Now, I'll go ahead and say one thing here. I know Bruce and I, we've chatted about this before, which is that there are a lot of people who utilize technical indicators on short-term timeframes. And it's not to say that it can't be a useful tool in your arsenal, but I think the biggest problem with it is that utilizing these on shorter term timeframes, just like trying to use support and resistance or any other kind of metrics you can use, or volume candles during short term timeframes, they can be really disorienting. That's where, again, I actually lean a lot more on Bookmap. If I'm going into those shorter term timeframes, I want to see what the market order flow is. And now with the liquidation tool, this gives us even more insights on those shorter term timeframes. So oscillators like the RSI, they hold a lot of relevancy, but they hold much more on those longer term timeframes, especially when it comes to assets like Bitcoin. There's been a lot of continuous similarities here where when buyers come in, And I think the important thing to realize is that these indicators are really being utilized by larger players on these longer term timeframes because they need to accumulate large positions. They need to get limit orders or bids filled into capitulation in the market. That's when you've got a lot of market order flow that allows them to not have to incur dramatic slippage when they're building their positions, right? In that case, they can just set bids, get them filled, and have their 6 to 12-month time horizon in play. And that's what's happened so many times in the past year. This also is happening as well, both on the not only during capitulation of the sell side, but it's also happening to the long side as well. You can see here, for example, the ones I have highlighted in red here, right? Both periods of time where again the RSI here on the 2-week was overbought. Right, we were above the overbought range here, at 70-point range. We had been after significant rallies here, and we not only saw a major volume blow off top here on both of these, but on top of that as well, fading momentum. The only kind of exception here being that we did continue afterwards, but afterwards had what was generally a kind of Wyckoff distribution pattern. Most of the gains really were made during these multitudes of weeks here from the fall of 2020 into the first quarter or January of 2021. So this is how I would look at long-term timeframes. When you really cut out a lot of the noise, you find some great opportunities where not only you can buy things at a discount, but again, for those of you who are probably more familiar with trading on a shorter-term time frame, you can even use really healthy levels of leverage. I would only recommend it though, so long as you have additional collateral on standby. And that's again why you can pick up these discounts here. Historically, over the kind of 50 to 60% mark is my threshold, right? And now considering in the longer term that we've had this kind of 60% pullback here, this is whereas a lot of people are actually going short the market, betting on a drop down to 20K, I'm more favorably leaning towards setting in a long position on margin if I'm going to, and having additional collateral on standby. So this is how you would kind of do it on the longer term time frame. The next chart I want to show here is the kind of shorter term, right? So if we go back to our presentation, we're talking really about 1 to 6 months here. One of the things that I think is really important to look for here when I'm looking at kind of a 1 to 6 month time frame, I'm definitely continuing to keep an eye on more on market order flow and some of these metrics like liquidation tracker. But the major thing here, I would say here that you want to watch for is you want to watch for what price is telling you. And I think one of the best ways to do this is by naked trading. For those of you who aren't familiar with the term, don't worry, it doesn't mean you got to take off your clothes when you're trading. Naked trading is where you go about looking for support and resistance. So I again like to cut out a lot of the noise when I'm setting up these positions. I look for those percentage declines like we have printed here on the chart, right? I like to buy into heavy discounts in the market if I'm going to go long, right? But even simplifying it more than that, I like to look at what price is telling me. And we're taking a look at the 3-day chart here. So we've really got, again, a couple of years worth of price information to work with here. And again, I think one of the key things you can do in order to start really gaining information on what price is telling you is when you cut out all that noise, you can start to see what price itself is telling you. We can see over time here that all the while we were going through a really stellar uptrend, right? For example, back here in September 2020, we had multitudes of weekly upward green candles, a bit of sideways price action, and little to no correction afterwards, continued pickup afterwards, correction that was soon followed afterwards. As we move up here on the ladder of this rally, you start to see momentum fading here. And that's a big tip that I'm going to talk about later on that I'll reiterate is following momentum. So for example, we can see here that, yeah, price was still climbing higher here, but what we talked about back in April on the DataDash channel was how all the while we were having these higher lows and higher highs, the first key sign here of weakness is the slowdown in pace, right? So you're starting to stall in momentum here. You don't need a technical indicator to tell you that. You don't need any oscillator. You don't need the MACD. All you need here is to see how price itself is printing on the chart. And then the secondary thing that you should be looking for here is a break of those higher lows and higher highs, right? On these longer term timeframes. And you got that right here within April, right? And that's when, again, market order flow, which again was already weakening here for the buyers or the bulls, started to come down here. And when you finally get that third confirmation of a lower high, what you got from back here and a rollover, that's your sign to start taking profits and have your stop set at a relatively similar range from the previous low. Because if you can on a midterm time frame, really over a trade that's going on for about 6 months, right? If you can take those profits home, if you bought anywhere along this cycle and you can avoid these corrections and buy it at a discount, that's going to be incredibly favorable. And that's again where once you come down to healthy levels here, you have cash on standby, you can take in, a healthy degree of leverage if you want at those ranges, especially once you've got the counter opposite, right? And imagine here for a moment, we were shown what it looks like when the market is ready to trend reverse to the downside. So many people who were betting on this downward move here or who got knocked out up here, well, they try to revenge trade. They try to short down here. And the problem with that is that just like the inverse of what happened up here, right? We had lower highs, right? Which generally seen as bearish by a lot of people, and also lower lows here. And that scared a lot of people. A lot of people were betting on a rollover to 20K. But what do you know, as the market was filling in a lot of shorts, betting that the price would go down, limit orders were getting filled, market order flow picked up, and it would push up price dramatically each and every time, just like it was when it was selling here, when you had basically institutions distributing. And I'll hint a little bit on this later on when we talk about Bookmap later on, about how it gives us some really great insight into the kind of harsh reality here of how crypto markets have changed. It has a lot to do with the derivatives exchanges, the lending and borrowing platforms that have really driven a lot of the credit and risk taking in the space, right? Because we can see here when we got, pretty much the counter inverse of this here, we saw continuation back to the upside. We saw the shorts getting squeezed, and we saw for the first time in history, what would many people would see as an all-time high in crypto markets being retested and even blowing slightly above that previous all-time high and then correcting back downward. It shows just how different this market is compared to how it used to work. The last thing I'm going to do here, and we're going to kick it over to Bookmap here, is taking a look at really the short term. This is, again, as we talked about here in the presentation, day trading to weekly swing trades. So when I'm looking at this chart here, I don't short-term trade often. I really don't see a reason to short-term trade, only for when we are in a channel of some sort, only when we are in some kind of technical pattern where there is a degree of predictability in price. When you're trending higher in price, when you've got, multiple week over week green candles, red candles, there's not much reason to try to trade during that. Only when you start to have, for example, capitulation and you start to see trend neutralization, that's the only time I'm going to be trading within shorter term time frames, and really be looking at the hourly charts like we're looking at now. And again, I like to keep it to the 4 hour here. I don't like to go too small into the 5 minute. I'm not trying to scalp or find really short term like opportunities in the market. What I'm looking to do here is still find some opportunities like what we've got right now, where you can make solid single digit returns on a trade. And again, that's where, again, you can employ a bit of leverage. And if so long as you have your stops and you keep it at moderate levels, it makes some really nice returns, some really great risk adjusted returns. So this is for me what I like here. I like predictable channels where I can find historically when it's time to take profit, historically when it's time to buy in, when it's the most difficult to do so, when most people won't. And I like to kind of stick to my guns here and wait for the market to give me that opportunity. I do not try and chase it. So for example, we're up in this upper band here right now. We've had a really solid move up. Bruce was hitting on this. It's a really interesting time in the market right now. We saw about a 4.5% move. And look, my long-term mentality is telling me, oh my God, we're at an ultra discount here. This is great. It's phenomenal. My long-term positions will start to recover. But when I'm thinking in a trading mindset in the short-term time frame, you got to cut out that noise here. We do want to keep in mind the longer-term trend, which, to be fair, I think still so far has been bearish, right? I think no one would disagree with that. We went through a heavy capitulation candle, right? The longer-term trend has been negative, so we need to keep that in mind. We don't want to get too excited until we get a close above this upper band here. Around 32,000. I'm not doing that. Now, first off, let's just kind of start from square one before we dive into strategy. Why is this range important? Why do I have these two white lines here, this range? Well, it's not only where price is channeling through, but again, if you look at the longer term time frames, you can predict that these ranges would be of some significance. This was the range of resistance back here towards the top of the year in 2020, which then started to serve as support for continuation trend higher, right? You had some wicks came close to this range here, and outside of that as well, it's generally a range of resistance as well, right? resistance for price. So I look at this channel here, right? We can see that price is playing through it here as well. So now what I'm going to be looking for here is for signs of weakness, like we saw back here in the play from May 30th to June 1st. I want to see price showcase to me, as well as the indicators we're going to take a look at through Bookmap to signal whether or not we could be in for a revisit down to this range, or at least out of this upper band that's going to give us some kind of potential to start taking profits along the way, right? Again, you don't want to just have it as simple as setting up maybe a short in this position and then only taking profits here. Because, for example, we got this retest up here and we did get nice follow through, but we didn't come down to that buy range, right? I use these more as a gauge for entry rather than for exiting. Right? It's not exactly as clean cut as that. But we are now in this upper band here. And although while we haven't revisited up to this range here, we are in the upper band here where we could start to retest towards this upper band at 32K and face some kind of degree of resistance, especially if we can't get a clean cut move through. Now, what I like seeing here is that we've got a lot of great tools to utilize through Bookmap that can start to help us in understanding whether or not we're going to really get a short squeeze that puts us above this band here at 32,000 or push us back down below. So we can see that the liquidations, they're churning through right now. We've got, for example, I'm taking a look at the Binance futures, one of the more liquid derivatives platforms. You've got 6.56 BTC liquidated in 128 separate events, 1.12 BTC over 16, and 4.9 BTC over 79 events. If you look at, for example, I usually have, I was having a bit of connection issues earlier, but if you have Bybit, a couple other major exchanges there, you can really start to see a visual representation of how much the shorts are getting really knocked out here. And what I'm looking for here is whether or not we're going to be able to start seeing a continued buildup here in the short squeeze effectively, then shorts getting knocked out of the market. You can see that in the CVD, you can see it within the liquidations. They kind of play tango together here within the trend. And if I'm starting to see a real vertical ascension here and the asks on the order book getting cleared, I'm definitely not going to be setting in any short positions. And if I do, I'm going to have a I'm going to have a tight stop in this case, right above this range. What's great about that is that you've got kind of, and essentially, if we can get a trade setup here, right? Let's say, for example, you're at this range right now, and you even wanted to set up a potential a bid in this case to short on the market. You can effectively set a really tight level to get stopped out at a 2.3% loss. And you can overall have a variety of profit taking levels through this descent downwards. That can give you a lot better return profile versus the risk profile. So that's, again, exactly why I like trading potentially during channels and sideways movements. It's also why when I trade in equities, I like to, even on longer term timeframes, build long-term swing trade positions during these channels where we have predictable ranges of resistance and support. And we can set those preliminary stops at ranges where it's not going to just basically, I'm not going to get basically hunted out in a sense. I'm not going to get my position knocked out. But at the same time, I have a great return profile. So that's one key thing here. And again, what I would say, and I'll build up here, is some of the Bookmap strategies. I'll go ahead and pull that next slide up here. These are two of the ways that I like to use Bookmap. I like to utilize the cumulative volume delta and liquidation tracker, and in a sense, see whether or not there's a divergence from price. So they're kind of two different setups here. And again, don't take it at absolute gospel. I'll explain a little bit as we go through. When price is rising with slowing momentum, so again, as we talked about earlier, whether it be on short-term timeframes, long-term timeframes, if you're starting to see that accelerated momentum is starting to weaken, but we're still climbing higher, and we see the cumulative volume delta and short liquidations aren't following upwards, let alone in this case, they're actually probably declining, you want to start to lean bearish and set bearish setups. And vice versa, when price is starting to decline over time with slowing momentum. So let's say, for example, you really had the capitulation candle back in early May. The price might be even rolling back over again, slowly but steadily. But the CVD and long liquidations aren't. A lot of those things that would carry price lower, the market order flow that causes the domino effect, the long liquidations getting knocked out that makes that domino effect even stronger. You want to start to lean bullish, right? And this is again why I think Bookmap is incredibly powerful as a tool. It's just you need to know how to use it in a way that makes sense for you. Now, what I'm going to be watching for here, and I would say right now we don't have a direct trade setup at the moment, but we might be getting one here very, very soon. I'm going to be keeping an eye on the liquidation tracker and the CVD. Right now, we're getting a really nice acceleration of shorts getting knocked out of the market. There's a lot of bearishness in the fear and greed index. A lot of data science models are signaling optimal levels of fear where we could be in for a longer term rebound. So that's why, again, the stops are so important if you wanted to set a short. But what I'm going to be looking for here as just kind of a visual representation is I'm going to be looking for a rollover here in the CVD as well as the liquidations here. So if I'm starting to see here that there isn't any acceleration in growth, right, in these two metrics over a multitude of hours and price is still ticking higher, that's going to be my telltale sign to start setting up a short position, right? And vice versa. If you had the counter opposite of this, if you really had negative market order flow, like a lot of the red volume dots sending downward, and you started to see a divergence here where shorts weren't getting liquidated anymore and the market order flow is starting to tick higher, then I want to go long. And there's a big reason for this. Um, I think what's so incredibly powerful about Bookmap is that it gives us the visual truth about what goes on in crypto markets. Right now, there are so much degrees of liquidity that have moved from the traditional spot markets, dollars, crypto positions that have gone from traditional spot, which has originally made spot markets so liquid and so reliable and more consistent. A lot of that money has flown into derivatives. It's flown into exchanges like Binance. It's flown into exchanges like FTX, Bybit. And the problem is that people are delving in too much risk. And when people are delving in too much margin, you're going to get these cascades of liquidations. It's exactly why when we go back here to the chart, the corrections we've been seeing on these longer term time frames. You used to not get mid-cycle corrections like this. But all the while we might hate it, we might love it. Either way, we got to understand it so we can adjust our trading strategies to it. All right. And again, if we go to the shorter term time frame, right, these kind of cascading domino effects and liquidations are really, really beneficial to have some great trade setups for the rebound, both in the short term and the long term. So again, I'm going to be watching here to see if this market order flow and liquidation slows down. Right now, it's accelerating quite high. And if you start to clear through a lot of these asks on the order book, you can get some really quick acceleration to the long side. So again, I would say there's no problem in having trade setups for both. But if you are to do one of those longer term time frame trades, I would wait. And again, just like how you might have a stop here, for example, at 32,500 if you were trying to originally short, flipping long in this case only when you get a close, I'd say a daily close above this range. And that could again be a position you really set in at healthy levels of margin or just at a 1x leverage and just let it ride up and you can make some great returns in the short term. But again, this is more focusing here on the short term setup here. And I would say all the while I'm excited to see, again, in this case, markets starting to revert course. We can't be too certain of it. You don't want to get too confident until you get that daily close above a range of resistance. And the big thing I'd say too, maybe to kind of close off here, maybe we can dive into some of the trading tips and then dive into some questions. The reason why I don't trade too much in the short term and why I like long-term trades is when you really start to zoom out here, if you get a close above this range here, what I'm thinking about when I set up a long here at 32,500, some people would be like, Nick, why didn't you set a long back here? There's a lot of missed potential gains and everything of the sort. The reason why is because I've got a much more clear picture that revisiting down to new lows is probably highly unlikely if we broke up to the upside of the range. And second off, I know that anyone who has set shorts in this range is going to be slowly and more and steadily closer towards having a margin call event, right? When you have long-term accumulation patterns, that is a golden sign that whatever trend, whatever direction the trend picks up, it'll probably continue through. And it's going to be painful for the other side of the trade. just like it was for all the longs that got knocked out on the way down. It plays both ways. So that's what I'm watching for here. I like seeing the momentum here for more of a long-term setup. And we're at a healthy discount range here where we would probably expect some kind of relief. We've had nice sideways accumulation. So I wouldn't take it out of the question here that we get the breakout higher. But if I see weakness here, right, solid weakness here, lower highs, right, and we start to see that market order flow as well as liquidation tracker divergence from price, that's going to be some signs that I want to take kind of the short-term trade. And I got my risk measured out here. That's the nice thing. So again, I'll go ahead, pull up the presentation here, and we'll dive through some key points here that I think might be helpful for you guys in your trading journey. So one of the big things that I like to do here is utilize ratios. So I know that all the while I used Bitcoin in today's video as an example to track the market. Looking at fiat pairs can be really useful, but I'm someone again who always wants to not only make a return, but I want to be in the long term outpacing Bitcoin or outpacing the next best position that I could hold. So I could give a great example of this. Many of you guys have probably traded in the altcoin space, and you're probably familiar with Cardano or Ethereum. Now, these are typically comparative protocols because they're both layer one blockchains. They have very similar focuses of deploying smart contracts and allowing for decentralized applications. So what you can do here that I think a lot of traders really don't consider to ever look at, but is incredibly valuable for technical setups, is taking your favorite altcoin, which may not have a pair against Ethereum. In the case of ADA, there is, and creating custom ratios. And TradingView allows pretty much anyone to do this on daily timeframes. So I'll go ahead and take it here to the daily chart. We'll pull up, for example, ADA, BTC. We're going to divide that by ETH BTC. So I'm going to repeat this step here again. You guys can see how I'm basically taking one Bitcoin pair for Cardano or ADA, and dividing it by ETH to BTC. The BTCs cancel each other out, and you get a really nice ratio. Again, sometimes you can just type your two currencies, and you already get that ratio, that trading pair available, and you can watch those as well. But I would say, for example, building the custom one works just as good here. Now, what happens when we bring this ratio up and we dive in maybe to the weekly chart? We actually get a really interesting chart here. Historically speaking, we can spot the general blow off top range for ADA to ETH. Back here in February, this is when ADA was really approaching its kind of heightened range, same as back here in August 2021. Some really heightened levels here, not just in the dollar pair, but against ETH. And this is very similar to the range we saw back here in December 2017. If I get off the log scale, it's still highly consistent. And you can see down here as well, you've got the accumulation range, right? Down below this range here as we go towards kind of, I would say roughly, it's sometimes difficult to speak on the actual decimal point, but you basically got 3 decimal points down to 22,753, right? We've got highlighted here on the chart. This is where buyers will definitely be coming in, those accumulators who are waiting to eventually sell into the strength later on, right? So you can utilize ratios as an important kind of additional tool outside of looking at the traditional ADA BTC pairs or ADA USD pairs. Go deeper, dive into the ratios, look beyond what the BTC or dollar pair is telling you. I can tell you all this has saved me more times than not in kind of getting into overly speculative positions when the market's already hot. And it's also been a great sign for me to get into altcoins that are actually at a variable in the ratio that's going to be beneficial for me to get into ADA, right? If I already know ETH is probably going to appreciate during a bull market, I got to know that I'm getting into ADA instead of ETH at a favorable price territory, historically speaking. And the more price information we have to work with, the easier that trade setup can really be. Next up here, follow momentum. Whether short-term or long-term, momentum is king here. And that's, again, why I really like the CVD here, as well as the liquidation tracker. Because, again, while price might be trending higher here, it has been in the lead here, charting higher. What I want to make sure of here is that the things that are going to carry that momentum, liquidations, people getting knocked out, forced out of their position, forced to buy back into the market, as well as the market order flow, those two metrics are continuing to churn higher. If they're not, then that can be a sign here that all the while price is hanging high and the bulls are confident, the momentum stalling here and the party's about to end and revert course. right? So that's again a very very important thing, and that goes also for like the long term positions here. Sorry, the midterm trading that we talked about back here, for both tops and also both bottoms here, right? Again, I know a lot of people are excessively bearish after this candle here. We had in 3 days, a 16.4% downward move. But I mean, folks, I mean, it's important to keep in mind that we've gone down 61%. And on top of that, since this capitulation candle off the volume, price really isn't moving lower, right? While the concerns of the Fed and all these macro elements might be justified, price isn't showing us that it's concerned right now. All right. So that's the important thing, and why I like talking about long-term timeframes and momentum. As I mentioned earlier, naked trading is great, but it requires strict follow-through, and this goes with this topic of momentum. If we go back here again to the chart, right, you can see the general fade. You don't even really need an indicator to tell you. You can start to see here that price on the long-term time frame is not keeping up with as much as it used to. And not to mention not having a healthy correction in between, like we used to get in cycles. It's just this constant optimism that's slowly but steadily losing its kick. All right. Let's see here. Only using indicators on long-term timeframes. We went over this a little bit. Proves to be immensely valuable for me personally, like as I've gone through my trading journey, both in equities, whether you're looking at major indices like the S&P 500 or the NASDAQ, as well as individual stocks and cryptocurrencies. Don't know so much about altcoins. Can't say that exactly, but I think for Bitcoin, it holds a lot of weight. And last but not least, when in doubt, zoom out. Always consider the macro trends and their weight, no matter how short a time frame you're trading in. Okay, and that's again why, as much as I like these kind of discount ranges here, the trend has generally been downward right now. So we need to get that close above this range here. That signals we're more likely than not to get this kind of breakout higher. These kind of major volume candles, excuse me, not just volume, the actual price returns, right, over 2 week period where we have a great buying opportunity down at this range of this discount territory. All right. So again, when in doubt, zoom out. Don't get too caught up in the short term of trading. I'll get back here to the 4 hour chart. Right. Don't get caught up too much trading in this range here and focusing too much of your portfolio or your attention on this, especially when the trend on the longer term starts to change. Okay. So yeah, that's basically it for the presentation, guys. I appreciate you all giving me some time to go over. I would love to dive into some questions and hear any feedback from you guys, kind of dive into things. But Bruce, did you have anything you wanted to chime in on?
Yeah, I mean, many things. Really a fantastic higher time frame outlook, and for a lot of traders that attend our daily webinars, just note how Nick is looking at higher time frame market structure, and how often he mentioned that and how important it is to him. And then he's kind of zooming in with using some of these indicators, using order flow, using cumulative volume delta along with this new liquidation indicator, to start to understand and gauge the momentum in the market. So until then, he's looking for this trend continuing, but on the lookout for something else at these specific price levels. Really, it's very much the same thing, Nick, that we go through basically every day in our webinars. Just a much higher time frame, much more zoomed out look.
Exactly. Yeah. And one thing I wanted to kind of point out, Bruce, exactly as you mentioned, with those longer term time frames, it kind of starts to expose what the whales are doing. People commonly talk about like, the people who really drive the market. And I think what's so great about this is that, again, even if you are a short-term trader and you're trying, maybe for example, you want to short the market or long the market, knowing that broader trend, and also as well when momentum is starting to stall and where you should start to lean more actively bullish or bearish, that can be so much easier when you start to understand these kind of these patterns of. I know people have started to talk about it a lot more over the years because it has played out very commonly in crypto over these past few years, really since 2021. And that's like Wyckoff distribution and accumulation. if you can start to understand how the kind of the composite manner, these larger players in the market, how they will set up declines and also ascensions in price because of the fact that they're getting rid of positions or accumulating, it makes understanding where the market's going to go next so much simpler. And it can again be very important again, even if you're on that short-term time frame, to make sure that you're not going to get effectively caught with your pants down and stuff when the trend goes completely the opposite way and stuff. So always zooming out, I think, is so important. And I think again, how it plays out here is you can do your technical analysis on TradingView, and look, TradingView is great. But the biggest problem here is that you don't have the diagnostics to really dive deeper into it when those longer term trend reversals are happening. If this liquidation tracker really gets them up into the upper double digits, like over the next coming hours, I mean, we could really seriously be looking at a breakout above this channel of resistance and have a really stellar double digit move for Bitcoin over the next few weeks. I'd much rather, to be completely frank, capture that move, ride with the momentum in the trade, very limited ask resistance on the order book, healthy levels of leverage, and ride that wave versus trying to trade in this channel for so much time and stuff. Like if the market gives me this opportunity, I'm going to take that above all and stuff and ride with the momentum and not try to fight it until I see that stalling of momentum and I start to see the divergence. Too many days where the liquidation tracker is starting to deviate from price as well as the market order flow with the CVD, then I'm going to continue to ride that wave.
Yeah, that's a really interesting study there that you have with cumulative volume delta and the liquidation indicator, starting to gauge that momentum versus the liquidations. So, looking for that short squeeze, looking for the acceleration in some of those areas. Yeah, it's you're overlaying. We know that they're going to be liquidations up at some of these areas here, but how is that comparing to the cumulative volume delta in the overall kind of picture here? And
Exactly.
yeah, giving a really good insight there. And so far so good. I mean, this looks like it just wants to continue.
Exactly. Yeah, I mean the volume dots are overwhelmingly green here, and that's again kind of demonstrated. And I was, for example, I can share, for example, like earlier on, I was starting to notice that the CVD was starting to kind of neutralize out. You've got as well the liquidation tractor. And the thing about it here is that like even if you wanted to set up like a short setup already, the reason why I wouldn't have at this point, again, as we talked about in the slides and stuff, I think the thing here is that we didn't really see a decline in these values here. Right? We haven't seen market order flow really decline. It's just been sitting kind of sideways here. So I wouldn't try to set up a short off this range here. But if I started to see, a significant trend reversal here, similar to how you see divergences maybe in like the RSI against price, that's when I would maybe start to set up a short position because you can start to get these continuations here. It just sometimes takes time. And I bet you've probably seen that, Bruce, where again, like the CVD can just kind of push sideways for a while. And that also can be a sign that there's probably something coming upwards soon because if you've had a lot of buy side pressure and you're not seeing sell side follow through, then you're likely going to get a continuation higher and it's just going to start chugging higher until you really see that CVD decline.
Yeah, exactly. And then your insights on the divergences of not only CVD, but divergences of liquidations, really interesting kind of layering there as well, because it makes sense. I mean, the market will probe and test higher into certain areas, and then it probes again and it doesn't find the liquidations, nor does it find the volume for that continued momentum. The market's telling you something here.
Exactly.
Yeah,
Very cool.
let me jump into a few questions here. Let's see. Marvin is asking about the different data feeds for altcoin derivatives. Marvin, we connect to 21 different crypto exchanges, so please go to bookmap.com and you can click on the toolbar there, connectivity. That'll take you right there. Let me know if you have any other questions. And then back in Discord here, let's see. I think there was a question here. No, I didn't see one in Discord. I'm sorry. Um, Okay. No, no, it's quite clear, Nick. So clear. I don't think we have any need for any questions here.
Very cool, Bruce. Yeah, I think maybe one thing I could do here is talk about. There's actually one other setup that I think I talked a little bit about earlier. Maybe I could dive into just a tad bit here. Um, what I really like here again about multi-book overall compared to any tool that I've found on the market is that again when you have this aggregate order book, it can be really good in order to understand here when you're going to be facing some kind of waves of both support and resistance on price. So I kind of try to get out of the noise of kind of the market makers, the kind of short term, kind of shorter price range areas and stuff. And I like to look for kind of the big bids or the asks on the order book. Again, as you zoom out here, we can see highlighted ranges here where you've got a lot of bid side support. Again, not as much here on the short side as you've got for the bids. You got a substantial buyer down here, I think around the 20, 27,000 bucks. Yeah,
27,000. Yeah.
exactly. Yeah. So like what you could do there again as well is sometimes for short-term trades, if I find that range and stuff has been holding for some time and a seller isn't, there's not a lot of sell side momentum, price kind of gracefully comes down to that range. We're not getting a lot of sell side pressure. I'll set a nice like bid in this case or a nice like buy order around that bid on the order book and effectively have a really nice tight stop below that range. So if someone really fills that bid on the order book, or worse off, if it turns out to be a spoof, in this case, if there's effectively someone just putting a 400 Bitcoin bid on the order book and they don't plan to get it filled, then I've got a really limited risk profile. I've got effectively this kind of wall to protect me from my order. It is important to understand, though, that again, all the while, this is something that's beneficial for me as a trader. I have to understand again that this is probably across a variety of exchanges. So you don't want to set your stop like right below it. You probably want to give it enough range where arbitrageurs will protect you from getting liquidated. In that case, they'll take advantage of the differential between those exchanges. So I think that again, if you ever get price up in towards these really big bid walls, this one is kind of an anomaly here. It's usually not this kind of big, but if you do get these kind of anomalies where there's a lot of bid support as well as resistance, right? If you're placing a short, it can go both ways. So I think that's why, again, I know some people always talk about, oh, the order book can always change. And that is true. But again, it at least gives us an opportunity to potentially have some really nice low risk, high reward trade setups. So,
Yeah, I saw that you had multi-book up, and I'm glad you mentioned it. For those of you who don't know, this is another Bookmap tool that we developed, and it is actually, you're looking at here five different exchanges all within one instrument. So this is a synthetic instrument, but it is BTC USD from Bitstamp, Bitfinex, Coinbase Pro, FTX, and Kraken. So this allows even more transparency. You, like Nick was saying, the individual exchanges, you might not see some specific liquidity there, whereas in this product, you're going to get a much more objective view.
yeah, exactly. On that point that Bruce was mentioning, like why for me this is like a holy grail of like market insights is because I mean, if all the while it doesn't aggregate every single exchange in the market, you're getting, I would say, well over 50 to 60%, maybe even more of the dollar-based liquidity trading between Coinbase Pro, FTX, and Kraken, and then kind of the legacy plays like Bitfinex and Bitstamp. I mean, that's really deep levels of liquidity for tracking bids and asks on the order book, market order flow. And I think the biggest problem that people can get caught up in, when tracking volume, and also as well, like there are sometimes ways where you can get this kind of market data like the CVD. The problem is that you're just looking at one exchange. So it doesn't tell you the full story. You could get someone, I see this all the time. For example, I love looking at Bitstamp for its price history, but Bitstamp isn't as liquid or as actively traded as Coinbase Pro or Kraken. And because of that, I could see someone put in a 100 BTC buy on Bitstamp just because it's the exchange they use. And that can completely distort my view about what whales or larger investors are doing. Are they really FOMOing in? And that's where, again, multi-book, I mean, it's just such a powerful tool. And how CVD here is one of the truest metrics you can use to really track market order flow. You can see that across multiple exchanges here, buyers were coming in big time and driving up price. and that materialized about a $2,000 premium just over the last 24 hours. So
Yeah, no, it's great stuff. It's a really powerful tool to be able to have that kind of transparency or objectivity. Just so everyone knows, at the moment here, the multi-book product here from the 5 different exchanges does not offer the new liquidation indicator, but it will in the near future. So be on the lookout for that, to even find more kind of correlations, or adding in even more exchanges in here to get more objective view on what's actually happening with the liquidations.
yeah, it's funny you mentioned that, Bruce. That's like I know I was talking to you and the guys about this. I think that is going to be a major opportunity here to be able to track liquidations across all these major exchanges here. I mean, especially with the rise in prominence of FTX. I mean, again, if you wanted to do this for dollar markets, BTC to Tether, being able to have that kind of multi-book measure and stuff across those markets is going to be incredibly powerful, and tracking liquidations along with that. Um, because I know it sounds like harsh, it sounds conspiratory and stuff, but I mean these exchanges, they make tons of money when people are getting forced out of positions, and it's why you should never be over leveraged. Always have additional collateral on standby, and trade within reasonable levels of margin if you're going to use it. Learn the downside risks, and really only enter in during those optimal periods of time. And always, if you're going to be trading on shorter term timeframes, have reasonable stops set. So.
Yeah, that's always excellent advice. A, a few more questions in here, about the multi-book, and was there a plan for custom multi-book? We already have that. In fact, that product came first, and then we actually, you can see here the symbol. It says BTC USD, and then SP stands for spot, MB stands for multi-book, and then at BMD stands for Bookmap Data. So in this sense, we are actually the data provider, that we've combined these 5 different exchanges together into this synthetic instrument. Just go on our YouTube channel there, and Hendrix, you'll find there's 2 different multi-book products. Okay, this is the Bookmap Data product, and you can customize any book that you want in there. Right, so already exists. In fact, it was the first one that existed. Dishko, yeah, you can change. You can trade from any of those exchanges if you have an account, from those 20 different or 21 different exchanges that we offer for cryptocurrencies. And then let's see. Nick Valcho is asking, how do you distinguish your order walls that are fake, or which ones are real, so you can identify support and resistance levels?
No, it's a great point. I mean, and this is again where I think multi-book comes in handy, because it's very rare that you're going to see this happen across. Like, first off, we're taking a look at, like, the liquid, pretty much the most reputable exchanges in the space, and order spoofing all the while, and markets generally is. I mean, I don't want to be too harsh and stuff. Spoofing can be seen as into a large degree, of crime in this case. So you don't really see as much of it, I think, as it's claimed to. But there is some people, yes, who are adjusting the order book. You do have algorithms that are adjusting the market. But I would say using multi-book helps to give a more clear view here, because you're able to really spot here bids on the order book that are set really for those ranges, people waiting for lower bids on the order book, and seeing it rather than just on one exchange but across multiple exchanges can be really helpful. And again, no matter what here, let's say, for example, like we can take this example for a moment. Let's say that this huge bid wave here of buy orders that's roughly around like a little over 400 Bitcoin. And then again, expanding around that time, that price range, you've got another 100 in each direction. Let's say for a moment that this is all fake, that this person does not want to actually get these orders filled. We can just simply wait for an entry here down when price again comes down here, gives us the favorable setup. I like declining momentum here. I like seeing that the bid is holding for a long period of time, that it isn't evaporating off the order book right as price enters towards it. And so long as you have price holding there for some time at a tight stop, you can really mitigate your risk profile. The exchange will execute on your stop if you have it put in. The mistake that people make here, I think, is that a lot of people will go down here with the assumption that this is not going to be broken, this is a real bid, and either someone really does sell 400 Bitcoin, or that person removes the order from the order book, and immediately either traders themselves are going to sell, or if someone's selling 400 BTC, they're likely not the only one selling 400 BTC. It's going to continue through, and there's not that perceived support there was. But luckily, you can have your stop set effectively, and basically get out of your position to protect yourself at that range. So yeah, I would say again, there's no way to know exactly who is who on the order book and whether or not they're going to remove it. Anyone can change their decision at the last minute. But I think stops are really the tool to help protect yourself in utilizing order book setups, and more specifically, multi-book here is what can really help to filter out the noise. And again, see whether or not, like, these kind of short-term adjustments that are moving and the order book are really real or not. So again, yeah, like I said, I don't really use the tight range here of the heat map and the order book. I really like to focus on, zooming out here, seeing on a highlighted basis, where really the potential setups here. We might have some more down here, but right now the big one here is 27,000. Someone's got a real big bid there. So that's really, again, it's a setup I don't use as frequently as simply using CVD, or the liquidation tracker, right? And that's again where I'll hop over. As Bruce mentioned, the liquidation tracker isn't available for multi-book yet. Now, what I do like seeing here, as we're kind of live here on the call, I like seeing that the liquidations, we're starting to get an overwhelmingly large amount of short liquidations now. Excuse me, long liquidations, my apologies. So you're starting to see here a bit of divergence, even though price is still kind of holding on the upward trend here, where we really almost might have just seen a blow off top here in liquidations. So what I'd want to see is really a kind of sideways push here, and then an eventual decline in both the CVD and liquidations. And that could be your sign that we're going to reverse the market order flow. It's going to turn negative, price would go down, and we would come down towards that. I'll go ahead and get it here on the shorter term time frame. That we would have a chance to come down here back down towards the lower band here and make a short entry if we fall below this line. But I'm not rushing into it yet. We just entered into this price range. I'm going to wait to get more price action before I do anything. But just again, something to consider.
Right, and then take a look at your CVD in that as well.
Exactly.
And you can see that CVD is flatline basically. So the market's probing is finding these buy liquidations, or the transaction is sell side, but you see the liquidation indicator drop. But you got some nice divergence there with the CVD and liquidation indicator. So
Exactly.
lots of things to look at here. Nick, one of the things I really like about what you're mentioning here on some of these higher time frame outlooks is you're talking about risk management within them.
Mhm.
This is something really, really important, and how you're combining those into a kind of cohesive plan for yourself. And that's it. That's trading. So it's really good to see this on, on any time frame. You're very aware and looking at how you're going to manage that trade.
Thank you, Bruce. Yeah, again, I can only say, like, I've learned it. I think as every trader does, you learn it the hard way, trading in markets and going through a couple losses. And I think, I mean, even as you're mentioning here, Bruce, like this is like a prime example here. You've got a lot of people filling in longs, going leverage. They see the market momentum and they're thinking, oh my God, I gotta go all in, 20x, 10x leverage or something. And that's really been the mindset in this market here, because a lot of people are revenge trading in both directions, both short and long. And look at this, who's winning, right now? It's the exchange. I mean, exchange has just walked away within this past, I think it's about past hour and a half. I mean, just on Binance, that's over 11, almost nearly 11 BTC of liquidations. and price is back right where it was before. So I think again, having exactly as you emphasized earlier, it's so true. Like having proper risk management is the most important thing. You can, have a strategy that 60% of the time works, even one that 70% of the time works. But the problem is that those 30 or 40% of the times that you lose, if one of those trades ends up losing everything, if you don't have proper stop setup, if you're not entering in at a favorable on a favorable direction of the trade in the longer term scheme of things, then you could really face some traumatic losses in the market. And I've been through that time and time again with equity markets and have experienced that through bear markets and crypto. And thankfully, I've made kind of adjustments to my strategy to make that happen a lot less often.
Yeah, really, really good stuff. Putting those two together is really where you get the traction.
Mhm.
Let's see a few more questions. 83 Madden. Yeah, I guess I haven't been looking at directly at Binance there, spot, but you say there's over 2,000 coins there. Yikes, at 32,000.
Oh, wow.
And Hendricks here, does Nick have any specific days he trades on? I'm actually following Tino from Traders Reality. He will be presenting later. We hope on Friday actually. So just to let you guys know about that. Uh, yeah, it seems Tuesday, Wednesday, Thursdays are more liquid days in the market. So
Yeah.
yeah, if
Yeah,
you've
that's a good
tracked that.
question. Yeah, so I don't short-term trade like too much nowadays, but if I am going to do a short-term trade in the market, whether it be I mean equities, you're kind of forced to do it during the weekdays. I'm the same with crypto. I genuinely think, ironically enough, that the weekends, all the while there can always be opportunity in the market. Most of the volatility, which is what a trader thrives off of, is going to come from the weekdays, especially I think the opening and the close of the weekend, so Mondays and Fridays. And outside of that, I think it's the ironic factor about it is that on the weekends you really should have some time off from the markets because you already know that most of the market is stepping away, whether you're a long-term investor or short-term trader. I think that's really an appropriate time to step away from the charts because there just isn't much volatility. Not to mention, if there's not going to be much volatility, like other traders should probably take some time off just to step away from the charts. A bit of a weird perspective, I know, but I think it's yeah. I mean, honestly, if there's no profit potential, if price is really showcasing no trend, you don't want to try trading it. Again, the only people who are going to be benefiting there are the exchanges, algorithms, who are following a very strict protocol and strategy. Whereas in this case, it's just not favorable to day trade. So Monday, Friday, generally in the weekdays for the most part, I stay away from weekends.
Yeah, I think that's really wise. It's great to hear. I mean, the especially crypto markets. I mean, you can trade it 24/7. And now you're going to lose a lot of perspective by just driving yourself crazy in front of the screens all day long.
Exactly. Yeah, having no time to reflect on a trade, and then even to make matters worse, I think for example, I'm sorry, I'm drawing a blank there and stuff around it. You were bringing up a great point there, Bruce, overall about like the fact that just because crypto is 24/7, you don't always have to trade. And I think that's the biggest mistake people make is they want to find opportunities in the market. When in reality, you should almost kind of look at the market as this kind of emotional, ever-changing mechanism or machine and say, hey, until I get the setup I'm looking for, I'm not putting up my money. Like if you're really doing like trading as a job in this case, you can't treat it like a hobby. You can't, pretend like you're going out and betting on your favorite sports team or athlete. This isn't a casino. You need to come in with strategy. I mean, you can treat it like that and hey, you might be able to win big, but you should be demanding that the market meets to your terms like you would do in a business negotiation. And I think that that's something that's been so true. There's been so many times where, again, I like when I was in my earlier days of trading, I would kind of like hesitate to make a trade and stuff, and I would say, "Oh man, in hindsight, like I would have made so much money on that trade." And then, if I only would have bought that position I was going to buy. And then the next day, in equity markets, I've seen this with like Tesla and a lot of companies. It just like plummets all those gains down, and you would have effectively ended up in the red. So it's really good to wait until you get your trade set up right. You don't want to chase the market and try to find willy-nilly opportunities and go out of your strategy. And that's really where the discipline factor is so big. I know it's talked about a lot, but it's not followed through enough by enough people.
Yeah, absolutely. Well said. In fact, I mean, the chart is, this is what I find so fascinating about this new
Mhm.
liquidation indicator is you mentioned the casino analogy and not trying to be a gambler. Well, here it is right in the charts. I mean, this
Yeah,
is, you can see the gamblers here. They're getting
yeah,
liquidated. And you know, you're getting insight to actually how it is operating, and how the market probes to these areas to hit liquidations. And uh, you know, do you want to be a part of that? Or do you want to kind of stay away from that and follow a strategy that you can avoid this kind of action here?
yeah. Absolutely. Margin, like anything, it's a tool, you know. Like, and the thing is, I talk really kind of negatively about it on the channel, just for more of the fact for people to stay away from. Because even if you just spot trade, or really trade within moderate levels of leverage, like 2x or something, if you can do proper risk management and stuff on and a very very low levels of margin or just trade spot, you can make great returns. It's I think the truest statement I've learned over the years, and to be honest, even in hindsight over this past bull market and I think bear market or correction we've been going through, the biggest lesson I've kind of reiterated to myself even on my long term portfolio is basically making sure that when you are planning to make profit in something, make sure you've got a proper exit strategy and you know how to actually lock in those returns. If you can continuously on an annualized basis make 30, 50, 100%, and you can keep doing that year after year after year, and you know how to protect yourself and not make the mistakes that are really going to end up losing a large chunk of your money, that's how you win long term. And I think any of the successful traders, I think Mark Melody, as well as one of the ones that I saw recently. Again, he said that quote of like using trading as a hobby versus a career. Unless you really build some kind of rigorous structure and you follow to it, you're going to be a part of these guys right here. Where again, price really hasn't changed much. If you've just been long or short spot, you'd actually be neutral in your position around this range, anywhere within this sideways range. But if you didn't do proper risk management, these numbers here represent people who likely lost huge chunks of their portfolio or lost everything. It could be that this is maybe a small position for some people, and some people do follow strategies where they use 10x leverage or something for very small amounts of their portfolio, and that can work. But in many cases, exchanges, if they get the opportunity to knock you out, they will. Because they make a ton of money. There's liquidation fees. I'll say this as a fellow content creator, and yes, as someone who's got sponsored content on their channel and stuff. The one thing I don't do is I don't promote leverage trading platforms. I might promote an exchange who may offer it, like we used to promote Binance, but I'll never directly incentivize people to use leverage trading or have a referral link because there's liquidation fees that get charged, huge amounts of money that get charged when you get liquidated on either side, and the exchanges make bank from it. So, exactly as you mentioned, Bruce, the casino analogy is real, and it's a bit sad because it's diverted the trend so much. We used to get the smoother parabolic rallies, stark declines, 80% corrections, the multi 100% return bull markets. We're just not getting that like we used to, and it has to do with this dynamic in the market where just in the past couple of hours, this is just Binance, probably hundreds if not dozens upon dozens of Bitcoin have just been liquidated in the past few hours, and that distorts markets to a large degree.
Yeah, yeah. It looks like Dishko agrees with you too. It's been trading spot and had 170% returns only
Nice.
via the spot. Yeah, yeah. So kudos to you, Dishko. Nick, is there anything else that I don't think we have any other questions? Anything else you'd like to add?
No, no. I think overall, again, just to kind of reiterate over the slides again, these are the kind of two strategies that I'd want to share, just in case if you guys want to take a screenshot or use it yourself and stuff, and see how it plays out for yourself as well. As Bruce mentioned, I know nothing is direct financial advice, but this is kind of how I like to use Bookmap. And again, this is the more frequent setup here. Now with the liquidation tracker, this is just making it, I think, even more informative. And again, with these ways of using Bookmap, I always use them in conjunction with traditional technical analysis. Again, I follow, as I mentioned here, my other tips, utilizing ratios to get other additional market insights to see if a pair is overbought or oversold, following momentum. You get naked trading using support and resistance, following what price itself is telling you, and utilizing Bookmap in comparison with that can be incredibly powerful. And last but not least, only using indicators on long-term timeframes, and when in doubt, zoom out. I appreciate Bruce the kind remarks and stuff. The longer-term timeframes can just be so incredibly valuable and help you to understand where price could go next. So I think right now we've got some interesting price movements here. I almost wish I could stay on longer to talk a little bit about, but we might be getting a really nice setup here in the liquidation and CVD tracker for a rollover here. We'll have to see how it goes over the next couple hours. But I want to say I appreciate you, Bruce, and everyone as well listening to the stream for giving me some time out of your day. I hope it proved valuable.
Oh, absolutely. Yeah. Thank you very much, Nick. Really, really nice stuff, and really love this higher time frame outlook. I think it'd be so helpful that a lot of traders, a lot of times they kind of lose that outlook, and keeps them in line. So I've put into the chat your website, Nick, as well as your DataDash YouTube channel multiple times here. So if you guys are interested and you haven't heard of Nick before, you can follow him there. And let's see, Nick, if you don't mind, I'll just go over the last
For
slide
sure.
here and just show my, oh, hold on a minute. Okay, oops. My slide. All right, so sorry about that, guys. On these special offers, so this is something that we're offering just during this crypto webinar series all week. 30% off for any new subscriber. Okay, you have to be a new subscriber. Please use the code. This is good until June 13th, so end of the week here, Sunday. And yep, crypto series 30% off is the code. Put that into your subscription from bookmap.com. And then in the Discord special events room, if you just type in CWS, then you will be entered into a free chance to win Global Plus for 1 month. Every day we're going to do this, so give it a shot. And you just need to jump over to that hashtag special events room within Bookmap, and we will notify the winner. Okay, so anyway, thank you very much, Nick. A pleasure, and some excellent stuff.
Thank you, Bruce. The pleasure is all mine. Really appreciate you guys giving me the time and good back and forth conversation as always.
Okay, all right, take care.
Take care. Bye.
Bye bye.